When you see those really complex charts and hear people talking about Forex, it's easy to think it's some secret club for Wall Street geniuses. But what if I told you it's actually the biggest, most open financial market on the entire planet? Today, we're going to pull back that curtain and really break down how this whole thing works. So let's just start with a number. A number that's so big, it's kind of hard to even wrap your head around it. $9.6 trillion. No, that's not the value of some giant tech company, and it's not a country's entire budget for a year. It's something that happens again and again and again. That's right. That is how much money is traded on the Forex market every single day. I mean, to put that into perspective, the New York Stock Exchange, which we all think of as huge, trades maybe 200 billion a day. Forex is more than 40 times bigger. It's not just a market, it's the market. Okay, so what is this massive marketplace? Where's the headquarters? Who's in charge of it all? Well, the answer is probably not what you're thinking. The key word here is decentralized. It means there's no central building, no physical trading floor on Wall Street for currencies. It's all a massive global network that connects the computers of banks, big institutions, and even individual traders like you and me. It's kind of everywhere and nowhere at the same time. What's so cool is how all these features play off each other. Because it's electronic and global, the market literally follows the sun. It kicks off in Asia, moves to London, and then over to New York in one continuous loop. This means it's open 24 hours a day, which leads to this incredible liquidity. And liquidity is just a fancy way of saying the market is so busy, you can almost always find someone to trade with instantly. So we know it's huge and it's always open, but how do you actually trade on it? Well, it all comes down to a really simple idea: pairs. See, in Forex, you never just buy the dollar or the euro by itself. You're always trading one currency against another one. Think of it like a financial tug of war. You're basically placing a bet on which of the two currencies in that pair is going to be stronger. And this right here shows you the two basic moves you can make. If you go long on the euro versus the dollar, you're betting the euro is going to win that tug of war. If you go short, you're betting the dollar is going to pull stronger. It's like this constant seesaw, and your job is to guess which side is about to go up. But wait a minute, currency values usually just move by tiny fractions of a cent. So how can regular people make any real money? Well, that brings us to the most powerful, and honestly, the most dangerous tool in Forex: leverage. This sounds like a riddle, doesn't it? How on earth can you control $50,000 when you've only got $1,000 in your account? In the world of Forex, this isn't just possible. It's exactly how the game is played. And the answer is one single powerful word. Leverage is pretty much a short-term loan from your broker. They let you control a huge amount of currency with just a small fraction of your own money. So a 50-to-1 ratio means for every single dollar you put in, you get to control $50 on the market. It's the tool that lets small retail traders step into the same ring as the giant banks. Okay, this is the most important thing you need to get. Leverage is a magnifier. It takes a tiny little move in the market and makes it feel gigantic. If the market moves just 1% in your favor, you don't make 1%. With 50-to-1 leverage, you could make 50%. But, and this is the part you cannot forget, if it moves 1% against you, your losses get magnified by that exact same amount. Just let that sink in for a second. A tiny 2% move, something that happens all the time in the markets, could completely, 100% wipe out your entire investment. This is, without a doubt, the single biggest risk you have to understand before you even think about placing a trade. All right. So, if the reality of leverage hasn't completely scared you off and you're still curious, how should you actually get started? The answer is simple. You go slowly. Very, very slowly. This isn't a sprint. It's a careful, deliberate walk. For anyone who's serious about this path is non-negotiable. You gotta learn the language, write down a set of rules for yourself, and find a broker you can actually trust. But listen, the most critical step here is number 4, the demo account. Think of it as your flight simulator. Practice, make all your mistakes, crash the plane 100 times. It's all virtual money, so it's the perfect place to learn before a single real dollar is at risk. And finally, we have to talk about the darker side of Forex. Because it's so complex and it dangles that promise of quick money, the market is, unfortunately, full of traps for people who are just starting out. Before you even worry about scammers out there, you've got to deal with the one inside your own head. Trading is a psychological battlefield. Fear is going to scream at you to sell a winner way too early, and greed is going to whisper in your ear to hold that losing trade just a little bit longer. At the end of the day, being a good trader is often less about outsmarting the market and more about just being more disciplined than your own emotion. And of course, the external threats are very real. We've seen everything from massive scandals where the world's biggest banks were caught manipulating rates, all the way down to individual scammers selling guaranteed profit trading robots online. Just remember this, in finance, if someone is promising you easy money, it is always a red flag. So, how do you stay safe? It really just comes down to doing your homework. Check if your broker is registered with a real regulator. Be super skeptical of anyone promising you the moon with no risk. And just burn this into your brain. There is no such thing as reward without risk in the financial markets. Anyone who tells you differently is trying to sell you something, period. So that's the world of Forex in a nutshell. It's a place of absolutely massive scale and opportunity, but it's all powered by that double-edged sword of leverage. It is not a get-rich-quick scheme. It's a discipline that demands education, planning, and serious emotional control. So the final question isn't whether you can trade Forex. The tools are out there for everyone. The real question is, now that you know the risks and what it truly demands, are you prepared to take on that journey?